You are a CFA with 10 plus years of experience. And in our last conversation, we talked about how, when you discovered Bitcoin, it went totally against that everything that was taught to you. And that you're now a big advocate for Bitcoin, which, of course, for all the classically educated CFAs is... how do you say that? Like very triggering, especially on LinkedIn and stuff. And I find it really, really interesting to follow you. And so, we were thinking maybe it's an interesting conversation to teach people how to build wealth with Bitcoin, kind of coming at it from your CFA background. And maybe that's also a good way to start. Like, what is the classical way to build wealth? And then after that, we can go on to how Bitcoin kind of like changes that game.
So in general, I think what you want to do is you want to start off with personal finance. You want to start with spending less than you earn. You want to be able to save. Regardless of what currency it is, you want to be able to save. And then after you've saved some money, after you've gotten out of debt, if you don't have debt, obviously avoid debt if you can. But after you've gotten out of debt, after you've saved some money, you want to buy some assets, because if you just hold on to your cash, that cash is going to decrease over time in value. It's going to go down to zero. It's going to keep decreasing in purchasing power over time, because you're going to be able to, meaning that you're going to be able to buy fewer and fewer things over time with that cash. So the purchasing power of that money is going to keep decreasing, meaning that you get poorer over time. If you were to traditionally, what you would have to do is, if you were to have savings, you would buy real estate, you'd buy stocks, you'd buy bonds, you'd buy gold, whatever you want to, whatever you think is more scarce than the dollar or the currency that you're using. So your goal was to make sure that you're buying something that will increase in purchasing power over time, so that in the future, at some point, you can sell it and then you can buy whatever you want. Let's say in our case, we want to retire in 30 years. What we would do is we would buy stocks. We would buy the index funds. Let's say we buy the S&P 500. We buy as many shares of the S&P 500 as we can throughout our career. And then when we retire, we sell those shares and then we buy the things that we want. That's the traditional path. Real estate, same thing. You save up, then you buy real estate, and then you use the cash flows from that real estate to pay for the things that you want. You can compound, you can buy more houses if you want to. With stocks, you can use the dividends to buy more shares if you want to. You can set up a DRIP, dividend reinvestment plan, where your money just automatically gets reinvested. That's how the old system worked. That's how it was traditionally done. And I think people have just accepted it, and they don't want to leave that system. So I think what they're doing is they're continuing to do whatever they had to do before. But now with Bitcoin, the system has changed. The entire financial system has changed. The entire method of saving for the future has changed. Before, you have to buy stocks. You have to balance your portfolio between stocks, real estate, bonds, gold, whatever you want to. And now, we were discussing how it's changed. Now, I think you can get away with just buying Bitcoin. If you want to, you can hold some fiat currencies, and then you can just buy Bitcoin. Pretty simple, pretty easy. But I think most people want complicated. They don't want simple. They want things to be complicated, because they want to feel like they're doing something that's worthwhile. They want to feel like they're putting in effort when they really don't have to.
Yeah. Yeah, I like it. I almost wanted to say, like, well, that concludes the conversation, just buy and hold Bitcoin. But I love what you added there, because it's not clear for people. And that's also, I think, why Bitcoin sounds too good to be true when you listen to people like us talking about it. It literally sounds too good to be true, because you have been taught that building wealth, or I think if you rephrase it, like increase your purchasing power over time, right? That has to be complicated. And of course, there's many course boys, that will teach you trading courses and stuff like that to make it seem that everything is easy. But it's kind of like a game that you're playing, and a game sounds or seems complicated, and therefore also something that, a whole industry has sprawled around. I mean, the whole CFA. But I wanted to go back, I think, 2 or 3 steps, because how do you explain, you quickly went over it, but I think many people still don't realize it. Probably people that listen to this podcast do already, but the whole concept of the money losing value, right? Like when I grew up, it was all about saving. Like you need to save. Saving is very important, right? I think a lot of millennials especially have been taught this. But saving is broken, because if the money you're saving, if the units that you're gathering all the time are losing value, if each individual unit is constantly losing value because more units are constantly created, then saving is kind of like that, and it's also kind of futile. But isn't that part of the fiat money system to a degree where, because of this flawed characteristic of the fiat money, right? Or, well, it's on purpose, of course, but like the whole debasement part, that is why all these industries come out, and there's like more opportunity actually to kind of like prey on the general public or the plebs that are trying to find ways to mitigate the fact that saving is dead, whether they understand that or not. Is that something that, we can unpack a little? Because you have to understand that first, right? Before you realize, okay, saving is dead, I need to do something.
I think if a CFA were to listen to this conversation, they'd get very offended, because I genuinely think that I think that the legacy system is designed to just take as much wealth from people as possible. Even when you look at something like low interest or low fee index funds, like
but that's my point. Yeah, exactly.
You have VOO, which is the S&P 500. You can buy as many shares of it as you want to. There's a very, very small fee, and you might be thinking, oh, it's not that much. But the total, so the total market cap of VOO, the total assets under management, is something like $1.4 trillion. So I was doing the calculation. The fee is 0.03%, but they're making $420 million a year.
Yeah, wild.
$420 million a year from this fund that people think that is a very low fee fund. And the only reason why it's a low fee fund, the only reason why I can get away with charging 0.03% is because so many people buy it. Mm-hmm. If there were fewer people buying it, they'd have to charge more, because they'd have to concentrate the theft with a very small group of people. So when you look at, like, let's say I used to work at TD Bank, and we'd have these funds that were labeled as low volatility S&P 500 funds, and they would charge you fees of like 2% a year. 2% is insane. And the fund manager would charge you 2% per year, and then on top of that, the fund would most likely underperform the S&P 500, because what they would do is, I think they would sell calls or something. I don't know exactly what they did, but they basically used the volatility. They liquidated the volatility, and they gave you maybe a higher cash flow or something like that, something along those lines. But the fund manager was making a massive amount of profit when you could have just held onto the S&P 500. So the entire system is intentionally designed to take as much wealth from us as possible. The low fee index fund is making $420 million. The high fee index funds are probably making even more, right? There are index funds that are charging 1%, 1.5%. How much do you think BlackRock has made on the Bitcoin ETFs just for holding Bitcoin? They literally do nothing else. They literally just hold Bitcoin. Maybe there's some UTXO management involved. You have to pay a salary for that. But a lot of that money is going to executives. A lot of that money is going to salespeople, when people could just be holding that Bitcoin in cold storage and not relying on BlackRock anymore. But the entire system, like I said, the entire system is designed to take as much wealth from the average everyday person as possible, because that's the way that the system works. That's the way that our inflationary system is designed to work. We need to keep funding it. We need to keep funding this Ponzi scheme. We need to make sure that it doesn't collapse, because if we don't fund it anymore, it's going to collapse.
It's a loser's game in that sense, and I kind of always take like an extreme example where, just general plebs playing in the stock market are actually competing with, these high volume traders that have their own satellites, so they have faster internet connection, and they do this all damn day long, right? And it's just a group of people that constantly, talk to each other and optimize and all these things. And then, when you come back home from your general job and you sit on your couch and you open your Robinhood or whatever, and you're like, oh yeah, I'm going to trade some stocks and mitigate the debasement of my money. And that's a nice bridge, I think, to Bitcoin. When we talk about Bitcoin, when the message for Bitcoin is it's a superior savings technology, just try to add as much value as you can in the world, earn fiat, pay for your home and your food, and whatever's left you store in Bitcoin. And you don't really have to do anything else. Yeah, that sounds too good to be true if you compare it to the current game that people know.
Bitcoin custody is evolving, and while self-custody is important, it has its own risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your custody setup. OnRamp secures your Bitcoin in a segregated cold storage multi-signature vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Check out onrampbitcoin.com through the link below and schedule a consultation with the OnRamp team to get to know them and learn more about their offering.
Bitcoin is financial sovereignty, so why compromise when you need liquidity? Meet Debify, the Bitcoin-backed lending platform built by Bitcoiners for Bitcoiners. Debify connects you to institutional-grade liquidity and allows you to borrow fiat or stablecoins, all while keeping your Bitcoin 100% under your control through a non-custodial 3 out of 4 multi-sig escrow solution. Get competitive rates from a global marketplace of lenders with loan terms you choose from 1 month up to a year. No hidden fees, no rehypothecation, just pure Bitcoin-aligned lending with the highest level of transparency and security. Ready to unlock liquidity without ever selling a single sat? Visit debify.com/offers to explore their current lending offers. That's debify.com/offers.
Yeah, it is too good to be true. People do feel like that. They think it's not going to work that way. They think that they've already been screwed by the system, so they'll continue to be screwed by the system. They can't see a solution because they don't know what the problem is.
Mm-hmm.
They don't know that the problem isn't the corporations. It's not the corporate greed. It's not the poor people trying to take away from the rich. It's not the rich people trying to take away from the poor. It's none of that. The problem is that more and more dollars are going to chase everything that we want, no matter what. Every single day, more and more dollars are being printed, added to the economy, and then the people who get those dollars are buying the things that we all want. They want to buy houses, they want to buy cars, they want to buy food, they want to buy whatever they can, entertainment, vacations. So what's happening is more and more dollars are chasing those things, and then those things get more and more expensive no matter what. It doesn't matter how great we get at producing those things are going to get more expensive because more dollars are chasing them. But then when you look at it from the flip side, so when you look at it from the Bitcoin perspective, because US dollars can be created out of thin air, things get more expensive. Because Bitcoin can't be created out of thin air, you can't create as much Bitcoin as you want to, things get less expensive over time because the people who want to buy those things don't have more Bitcoin over time, right? So let's say, for example, if you look at houses, there was a point when houses were 64,000. The median house in the US in 2011 was 64,000 Bitcoin. So it cost 64,000 Bitcoin to buy one house. If you had saved the Bitcoin instead of buying the house, today you'd have something like $5 billion. So $5 billion versus one house.
Yeah.
Today, how many houses can you buy for $5 billion? You can buy probably 15,000 houses for $5 billion, maybe 10,000 houses. But the point is that you went from being able to buy one house to being able to buy 10,000, 15,000 houses. So your purchasing power, if you had just held onto the Bitcoin instead of buying the house, if you had just held onto the Bitcoin, your purchasing power would have increased 10,000 times. And at the same time, keep in mind that the price of housing has increased in terms of dollars. It's not like the price of housing has decreased in terms of, it's still gone up. It's still doubled, tripled in that time. But in terms of Bitcoin, it's dropped 99.999%.
I love that we're having this conversation because I think there's things that we talk about that we now find normal and learned over time, but there's little things I think we should unpack, right? So, okay, let's say there's an X amount of dollars in an economy, and you mentioned, right, that's the fiat money. the new units constantly have to be created. So the amount of units of money go up.
Hey, I think it's important to understand that when governments print more money, it's not like they're producing more product. They're just creating more money and adding it to the economy. They're giving more people purchasing power, but they're not actually increasing the thing that can be purchased. They're just giving more. They're not even giving people more purchasing power. They're just redistributing it. The government is basically just redistributing wealth from people who are far from the money printer to people who are closer to it. And that's pretty much it. That's why you don't want to save in dollars. That's why you want to save in assets instead of dollars. So you want to save in Bitcoin instead of assets now. So over time, it's just going to keep growing.
Yeah. So is this the biggest thing that changes now that Bitcoin kind of like entered the chat, right? Like Bitcoin exists, it's here. I generally describe it as like a mirror. It's like a parallel money system next to the fiat money system. Yeah. How do you view that? Like what does Bitcoin? How does it stir the pot, basically?
The legacy financial system is trying to push for people to be able to delay gratification and get instant gratification at the same time. So what you can do is you can basically hold your Bitcoin and you can borrow against it, and then you can spend that money on whatever you want. So let's say, for example, you have 10 Bitcoin, you want to buy a car. Instead of ever having to think about selling that Bitcoin, you can just buy the car. You can do that with real estate. Real estate, I mean, it's very well known for that. You can borrow against real estate. Real estate is great as collateral. Banks will give you as much money as you want to against your house, as long as you want to take 80% loan to value. They'll give you as much money as you want, but you don't even have to think about what you're losing. So what this does is it concentrates wealth with a very small group of people. The people who can afford to pay the down payment on a house, they can buy more and more houses. They can keep, let's say, for example, you buy one house, you save $100,000 for the down payment on the house, you buy that house. A couple years later, the value of that house has gone up. Now you can borrow against that first house. You can buy a second house. A couple years later, the value of both houses has gone up. Now you can buy 2 more houses. You have 4 houses now. A couple years later, again, the value of the house goes up. You can buy now another 4 houses. So now you have 8 houses. So people keep buying more and more houses when they don't need them. They buy them. I think they mainly buy them for the ability to just borrow against them. I don't even think they buy them. They don't buy them to live in. They don't buy them to, at least from what I've seen, people don't even care if they're not making their monthly mortgage payment with the rental income or their monthly costs. All they care about is that they own this property and they can borrow against it. They know that over time, the value of that property is expected to go up. So they'll be able to buy more things by borrowing against that house in the future, 30, 40, 50 years from now. So I think what the wealth you're doing, and this is something I actually don't like about the narrative that you don't sell your Bitcoin. I think what people are doing is they're trying to bring that idea, that game of not ever having to give away your assets. They're trying to bring that to Bitcoin. And I think it'll work for a little while. People will be able to borrow against their Bitcoin. People will be able to, they'll be able to have their Bitcoin, have their cake while eating it too. They'll be able to have their Bitcoin while spending their Bitcoin at the same time. And I think that's one of the most corrupt things about the system, right? And the only reason why you can do that is because of fiat. You can keep borrowing more and more against your fiat. But I think there's going to, against your Bitcoin, but there's going to be some point where people don't want fiat anymore. Mm-hmm. I think we're a long ways away from that. I don't think that's going to happen like next year, 2 years, 5 years from now. I think it's going to take a long time because most of the world has no idea what Bitcoin is. Most of the world has no idea what money is. It's going to take some time, but eventually it will happen. I don't agree with Michael Saylor when he says that Bitcoin doesn't compete with the dollar. When he says that Bitcoin is not a threat to the US dollar. I think it is, because people can transact without using Bitcoin. I can send you, without using the US dollar financial system. I can send you money, I can send you value, and all you have to do is you have to show me a barcode. I don't need to interact with the banking system. It's competition. And once a system has competition is when it gets disrupted. And I think that's going to happen with Bitcoin versus the dollar. Bitcoin is 10, 20, 100 times better than the current financial system. It's just going to get better and better over time. Over the next 10, 15, 20 years, it's going to get 10 times better than what it is today. It's going to keep evolving. It's going to keep adapting. And it's going to take out the US dollar financial system. I don't quite agree with Saylor when he says that Bitcoin isn't a threat. I think it is. It's a threat, and it's going to break the dollar financial system. And every time he borrows money to buy more Bitcoin, he's attacking that system.
Due to these unique characteristics of Bitcoin that are superior to all other assets that you can use as a store of value to build wealth towards the future and lower that uncertainty. It's actually a very predictable, and I'd say, as a risk-averse person, a less risky way to build wealth towards the future. Yeah, how do you view that?
Yeah, I completely agree with you. I think that it is a much less risky way of building wealth because there's no counterparty risk. I think that's the biggest issue that we have in this current system. We trust way too many people. Every single one of our transactions is overseen by probably 20, 30, 50 different companies. Every time we send money from one place to another, it's not as smooth as people think. There are companies in the way that are extracting wealth from every single one of those transactions. So what Bitcoin does is it brings everything back to first principles. It makes everything simple again without having to rely on all these different companies and all these different institutions in the middle that are using our trust in them to extract wealth from us. Like, most people have no idea that using a credit card costs them 3%. 2 to 3%, because they don't get charged that amount. They don't. It's not on their bill. The merchant is the one that's adding that cost in the back end, right? Let's say, for example, if something was going to cost you $57, instead of $57, it'll cost you $60 because of that 3% fee, whatever the fee is. You don't see it, but it's being charged to you. And I've seen some statistics where it said how families or people who use credit cards on average are spending $1,000 a year just in these fees, in this transaction cost. And that's going to happen forever. That's just a way for them to extract our wealth, to make our lives more expensive, to make it so that we can't afford the things that we really need and we really want in our lives. And over time, it's just going to get worse. Keep that in mind, right? It's just going to get worse and worse. It's not like it's going to get better. It's not like they're going to think, oh, we'll take a smaller cut of their transaction. They're going to want more. They're going to have to increase profits for their shareholders.
Mm-hmm. Yeah, because the numbers have to go up, right?
Right, exactly.
Yeah. And so if we unpack counterparty risk, because it's something that, so I don't have a finance or economics background. This is in my Bitcoin journey, like that part of Bitcoin is something that I've been focusing on, I'd say, the last 3-4-ish years. But counterparty risk, like just the entire concept, I didn't understand before, or just didn't know. Now I kind of translate it to, well, if you can own something, right? Like you can own the cash, you can hold it in your hand, but whenever and even the cash has to some degree counterparty risk, because there's another party that can just print more, right? So what you're holding is being debased. But let's say that you go from holding something to wanting to spend it or try to save it, right? We talked about store value. Everything that you can use to do that is, permissioned by other parties, right? So even when you buy a home and you are in the home, right? Like some people say, I cannot live in a Bitcoin. So they use that as an argument, right? Like, okay, I'm in the home. I can touch the home. I'm in there, right? Even conceptually, the title deed is some sort of counterparty risk, even because it's a third party that allows you to own that house. And even, I don't know if you would put that under counterparty risk, but even when, squatters come and they kill you and they take over the house, like it's not your house anymore, right? And even, and that connects back to what you said before. I had a tweet a few weeks ago. I said, like, the price, so not value, of your home goes up because your government devalues the currency you were forced to use, right? We talked about this. So nominally, the price of your house goes up, and everything that's been priced in this currency goes up. But then the government comes and taxes you more on the price increase of your home, right?
I think it also applies to stocks, where when you buy any stock, you're not actually putting it in your own possession. You have it through a brokerage. If you want to take possession of it, if you want stock certificates, for example, when I worked at my brokerage job, it would cost you $300 to take stock certificates into your own possession. $300. That was insane. And I mean, it was basically just a way to keep people from doing that. It was a way to keep people from taking full custody of their stocks, because then it can't be tracked. How do governments know if you take self-custody of your stock, then how do governments know that you still have it? How do they know that you didn't give it to someone else and you didn't pay the tax on it? Right. And it all just comes together. And then on top of that, there are other layers, right? It's not like your brokerage is holding those stocks for you. There are custodial companies that are holding those stocks for you. So let's say, for example, from what I know, Bank of New York Mellon is a massive custodian for stocks. So if they go bankrupt, or if their systems get messed up, how does anybody know that you're holding that stock? How does anybody know that it belongs to you, right? It's just the entire thing.
It's broken. Yeah. No, this is a great point to go on to the next part, because fully agree, right? So let's say all hell breaks loose and you have to flee the country, and you have your stock brokerage app, right? And it says like, you own this amount of Microsoft or Tesla or whatever. And then you get somewhere and you need food or gas or whatever, right? And what are you going to do? Like, are you going to show your phone and show like some numbers and letters from a centralized database, right? Just think about this. Like, think about the real event. And then you say like, look at this screen. Like, I'm worth this and this much. I can pay for this gas from you or the food or whatever. Like, but like, so you can like prove your wealth, but you cannot like send a stock or something, and that instantly shows like it's an abstraction. I call it like, right, like for a counterparty risk for me, the other word is like abstraction. Like, ownership is abstracted away, verification is abstract, right? The trade is abstracted away. Like, it's not in your you do not have the ability to do these things, basically. And with stocks, I think is a great example, because you literally do not own them. So what do you own? Well, you own you have an account at some stockbroker, and the stockbroker has some database on some, maybe locally, maybe on AWS at Amazon, whatever, right? And they have some database, and in the app connected to your account, they show you the stocks. But what kind of right does it give you? Maybe you have some sort of, it's in the contract, in like legal speak or whatever. In some way, you own these letters or numbers on the screen. But once you just like peel away those layers, you basically own nothing. But then, okay, Bitcoin enters the chat. Like, what are the things that people need to recognize with regard to Bitcoin's characteristics and how it compares? That's something I wanted to ask you. And I think this is one thing, right? So there are multiple things. There's no counterparty risk. You can truly own it yourself. So you can store it yourself. You are in charge of sending it to someone else, right? You are in charge of taking it with you, basically. What are like other characteristics that really kind of like shake up this game of ownership and property and all these types of assets, store value assets that you can use?
I think one key is that, and this is something that a lot of people don't really seem to understand, and they don't like it. They don't understand that it's a feature, not a bug. They think that's a bug. I think it's that if you were to mess around, you're going to lose your Bitcoin. If you need to take self-custody of your Bitcoin, you need to have your private keys, your seed phrase and all that stuff set aside properly. But the thing is that if you lose that, your Bitcoin is gone. You're never going to get it back. There's nothing that you can do to get it back. That Bitcoin is gone forever. You're never going to get it back. And that's something that people don't get, because in the current system, we all rely on banks. We all rely on banks basically giving us a reset email whenever we forget our password, when in the Bitcoin system, that doesn't exist. You can't do that with Bitcoin. There's no CEO, there's no customer service team. Bitcoin is a network that everybody gets to use. You get to participate in it if you want to. You don't have to participate in it. Nobody's forcing you to. So if you participate in it, you have to follow the rules of the network. If you go ahead and leave your Bitcoin with another party, you may never get that Bitcoin back, because all that is happening with Bitcoin is a record, and it's a record of which address owns what. Whoever owns the private keys to each address can move the Bitcoin within that address. So let's say, for example, if you leave your Bitcoin on an exchange and your exchange gambles it away, you're never going to get that Bitcoin back. There's nothing that anybody can do to change that. All you can do is, before the exchange gambles it away, you can put it into your own possession, and you can take care of it, and you can put it into your own wallet. And that way, Nobody can mess around with your money. Bitcoin is money that nobody can mess around with. That's the key. Whether you want to do something stupid or whether you want to manipulate it, you want to manipulate the network, you want to try to keep the price low, you want to pump the price up. Either way, you're going to get wrecked. You can't mess around with Bitcoin. All you can do is you can own it and you can use it as a store of value. You can use it as money. You can use it to pay for things. That's something that you need to understand. A lot of people are worried that if you lose your password, your Bitcoin is gone. But that's like I said, it's a feature, not a bug.
Yes.
If you have your Bitcoin in self-custody, where are you keeping your Bitcoin seed words? For me, there's only one way, and it's backing up my seed phrase with stamp seed. It's a single durable plate without any parts or materials. Stamp your words into solid titanium, which is fire-resistant, water-resistant, and built to last. Unlike etching or engraving, stamp seed's patented tools help you to deeply stamp every letter for permanent readability, making it easy for you to protect your generational wealth. Don't risk losing your seed phrase on paper. Get a stamp seed plate for unmatched protection. You can use code BRAM, that's BRAM, for 15% off at stampseed.com.
You can hold 12 words in your head basically, and you own your Bitcoin and you can move it anywhere in the most extreme form, right? But because that's possible, you actually have to take ownership, like true ownership, not only in the property sense, but ownership of the actual safety and process. Like, how do you handle it? Where do you store it? And all these things. And I think that's also what, when on one side Bitcoin sounds too good to be true, this sounds very scary. It's very important that you know the trade-offs between these things. So there's stuff that we talked about around fiat money, which I think in both of our opinions is very bad and not beneficial for the individual, right? And there's a lot of good things about Bitcoin that mitigate all that bad stuff on the fiat money side, but it comes at some sort of cost with regards to responsibility and really, really taking that ownership. And you have to make that. You have to put that against each other before you really, really go into Bitcoin, I think.
There are always going to be trade-offs though, right? There's always going to be, even with the fiat currency system, I don't think we would have gotten to where we are now without fiat.
Fully agree, by the way.
Right. Governments have helped us organize and to build our systems the way that they are. Like, for example, in my area, there's a highway called the 407. It wouldn't exist without governments. The reason why it exists is because, the reason why I think it's so great is because it's a toll road. People can go on there, they can pay extra money, they can go wherever they need to instead of having to go through the regular highway system. You have the regular highway system, then you have the paid system. If it weren't for governments, I think we would we would still have roads, but they wouldn't be the way that they are today, right? Not everybody would be able to access them. They wouldn't be as organized. The system wouldn't work. I also don't think that we would have, let's say, the way that we have housing. I think there's regulation is required in certain things. Let's say, for example, for housing, we want to make sure that a house meets the fire code. We don't want to we don't want to take the risk of living in a house that can be set on fire and there's nothing you can do about it, right? We want those benefits, but we also want our own freedom. I think that's what Bitcoin does. So what you can do with Bitcoin is you can choose. You get a choice. You don't get forced into doing things one way. In the current financial system, you get forced into doing things the fiat way. With Bitcoin, you get to choose. You can take self-custody if you want to, but you can also leave your Bitcoin on an exchange. You can also leave your Bitcoin with an ETF. You can take multi-sig if you want to. You can use collaborative, however you want to do it. You have multiple ways to do it. You get to make the decision yourself. You have to figure out what the trade-offs are. You have to figure out what the benefits are of every single decision. That's the point, though. I think that's the most important thing. You can give responsibility to someone else, but you also have the option to take it into your own hands. And I think that's what the current system doesn't have. In the current system, you're forced to do things one way. And if you try to get away from that one way, then you get screwed over. You get charged like crazy.
Yeah, that's what I mean when I say like Bitcoin is a mirror, right? It has certain characteristics that work in a certain way, which in one way shine a light on all the flawed characteristics of fiat money. But it also shows you that you have to take way more responsibility as compared to that fiat money. And that's kind of like the cost and benefit or risk and benefit there that I think is just a very personal decision for everyone. But again, I would describe myself as a very risk-averse person, and adopting Bitcoin and going all in is basically the most rational, risk-averse thing that I could do, right? And so, of course, it takes some study to get there and kind of like integrate that for yourself. But for me, that's been really worth it in that sense, because I feel like I've been able to actually make a conscious decision about how do I want to, store my economic energy and build wealth and lower my uncertainty towards the future. And just the fact that I've been able to do that, regardless of Bitcoin price or whatever, I think that is already a use case for Bitcoin.
Yeah, completely agree.
The next part that we want to talk about is, why does everything else trend to zero against Bitcoin? Like, what does that mean? Like, it's kind of a meme. It's a saying. We briefly touched upon it with the homes, for example. Yeah, how do you explain that, or how do you unpack that?
I think in general, it's just that everything else can increase in supply there's no stopping it. For example, you can build more houses as long as you
demand,
have
right? Increase demand,
right?
Make sure there's increased.
That's it. As long as you have enough labor to build the house, as long as you have enough raw materials, you can keep building more houses. Unless, let's say, for example, there's regulation, there's red tape with zoning laws, there's all these random things that stop you from building houses. Of course, that's going to slow it down. But in reality, you can build as many houses as you want to. You can grow as many apples as you want to. You can build as many tractors as you want to. It's the limitation is not the uses. The limitation is the labor that stops you from building more of the things that you want, the raw materials, the energy. All of that is the limitation. The difference with Bitcoin is that there is a limit for how many we can build. Everything else has no limit. There's a physical limit with how many things we can contribute, how much energy, how much resources we can contribute to it, and that's the limit for how many of those things we can build. With Bitcoin, doesn't matter how much energy you contribute to it, doesn't matter how much resources you contribute to it. You can keep contribute. You can run 1 billion computers. You can run Bitcoin Core on 1 billion computers, and you're not going to be able to change the difficulty adjustment. You're not going to be able to change the block time. You may be able
to wait 10 minutes, right? Yeah,
right.
Exactly.
You may be able to do it temporarily. Let's say, for example, if you run 1 trillion computers for the next 1600 blocks or something, that's when the difficulty adjustment happens. For the next 1600 blocks, you may be able to speed it up. You may be able to bring the time per block lower, and then the difficulty adjustment will increase after 2 weeks or something like 1600 blocks or whatever it is. But eventually, your power of being able to manipulate the system is going to go away. You may temporarily be able to bring up the production speed, or bring down the production time, bring up the production speed, but over time, it just reverts to the mean. It reverts to 10 minutes per block. You can bring it down to 7-8 minutes temporarily, and then eventually it'll come back up to 10. With everything else, if you start getting better at producing those things, you're never going to bring that time back down. Or sorry, not the time. You're never going to bring that time back up. So let's say, for example, we went from being able to build a house in a year to then 6 months to then 3 months to then a month and a half. It'll keep decreasing over time. I don't know the exact numbers, but over time, as we build better practices, as we build better processes, as we learn more, we improve the production of everything. So what's happening right now is we can produce more of the things that we want faster, but we can't produce more Bitcoin faster. So what that does is it makes it so that fewer and fewer Bitcoin are chasing the things that we want over time. Meaning the price comes down. The price keeps going lower and lower and lower until somebody's willing to pay Bitcoin for the things that they want. Let's say, for example, a vacation. You may think, I'm going to wait 2 years. I'll set aside this Bitcoin. I'll go on vacation in 2 years. In that time, people are going to try to incentivize you to sell your Bitcoin because the price is going to go up. There's a limited amount of Bitcoin available. There's unlimited demand. So people are going to try to incentivize you, entice you to bring that Bitcoin back into the market by offering you more and more dollars for that Bitcoin.
Yeah.
So what happens is we have less and less Bitcoin available. We have more and more of the things that we want available. Entrepreneurs are incentivized to bring more things that we want into the market. And it's all just supply and demand. The price keeps decreasing and decreasing and decreasing until more and more Bitcoin can come to the market and pay for the things that Bitcoiners want. The entrepreneurs have to produce actual value. They can't just produce garbage. They can't just produce more Bitcoin to fulfill their needs. They have to actually produce goods and services in order to get more Bitcoin. And the entire system is like a cycle. Over time, we have money flowing from the things that we wanted previously to the things that we want now. Instead of governments trying to structure the system a certain way, let's say they fund certain projects, instead of them being able to print more money and fund the projects that they want to fund, the market figures things out on its own. And this is where true capitalism comes into play. We have people who are willing to put their time, energy, effort, skills, labor towards certain projects because they want to, because
Yes.
they think that there's some opportunity there. And then we have the best
to earn a good reward, right? I
Exactly.
think once you add a better reward, I have something fun to share. Yeah, when you add a better reward, you ask for better work,
Yes.
right? And if people
it's the incentive.
Yes, exactly. Yeah, I've shared this example many times, but I think it was Antwerp. I was in a building that's from like 1560, and I thought, wow, what has been built in the last 50 years that's going to stand for another 500 years? Nothing probably. And that's what I think people need to realize. So I loved what you just said. And in the beginning, when you started talking, I was like, oh yeah, this is like some FUD that we also have to, I think, address because Bitcoin sounds too good to be true, right? And it's a bit daunting to study about the reason of existence of Bitcoin and the trade-offs and all the things I think we talked about. People use certain arguments against Bitcoin that they don't really understand, because I think they are easy arguments and easy to dismiss. But some things are very important to point out. And you said and this is what Jeff Booth talks about a lot, right? Like the natural state of or like the consequence of innovation is like deflation, right? Like what you said, that the whole purpose of people is to become better and more efficient and quicker and all these things. Like that's a natural thing in a total free market. In true capitalism, if I bake better cookies than you, and you also have a cookie store, and people buy more cookies in my store, then yeah, you go bust. But that's a good thing, because apparently I'm better at making cookies than you, which is great. And then you have time and space to try something else, right? Like that's the whole idea of having a true market function, is that, yeah, the people that innovate, that do it better, like they get rewarded, which eventually drives all the prices down. And what people need to understand is that why is stuff now more expensive than in 1970 or 80 or whatever, right? Like what you said about the apples, I also use it as an example. Like, does an apple need more energy to grow? No, like there's probably less people involved getting also apples from trees than like 30 years ago, right? So we are more efficient in growing, harvesting apples, but an apple is probably more expensive now. And I just saw a tweet: 1970 cost of living, new house $23,450, new car $3,450, movie ticket $1.55, gasoline 36 cents for a gallon, milk 62 cents for a gallon, coffee $1.90 per pound, eggs, that's a big topic in the US, 59 cents per dozen, right? And the average income was $9,400, and everyone could have a family with 2 children and a car and a home without just one person working. And all these things were there 50 years ago, and all these things are here now, but nominally, just numbers wise, they're all priced higher, which, if you think about the natural state of this free market, right, that the prices should go down with increased innovation, that doesn't really make sense, right? So these are two forces that are like fighting with each other. And if you think about the price of bread and apples and eggs and all that stuff, cars and etc., you have to, although I think it's a hard thing to accept, you have to accept that the side that's winning is the bad money, and you need to get out of the bad money, basically.
Yeah, that's the thing. That I think that's the secret here. If you get out of that crappy money, then you can get ahead. If you get out of the US dollar, you can finally start putting your time, energy, and effort towards the things that actually matter. If you, it's Saifedean says it as well, right? We have people working basically 2 jobs right now. First, they work this job to earn money, then they work a job to pay to get that money to stay in their bank account. Because if they don't, then somebody else takes that money from them. No matter how hard you work, no matter how much time you dedicate towards your job, no matter how much you delay gratification, if you save in dollars, you're going to be more broke than you are today in 10 years, 20 years, 30 years. The value of your money is decreasing every single hour, every single minute, every single second. It's decreasing by a certain amount because more and more money is being added to the system, and whatever you have is being diluted. So if you don't understand that, you can't get ahead. There's no way to get ahead if you don't get that. If you don't understand that your value of the value of your currency is decreasing, if you focus on, like I said before, corporate greed, if you focus on, oh, my government is the best allocator of capital, if you focus on capitalism is for losers and we need to get rid of capitalism, we need to get rid of Bitcoin, we need to make everything green, we need to focus on the weather. If you focus on that, then you're not creating value and you're going to go broke. If you focus on all of that, you're probably also you're probably not thinking at all about how the US dollar works. You're not thinking about how the US dollar is broken. You're not thinking about how to solve your actual problems. And you're just complaining. That's really it. So what Bitcoin does is it brings us back to earth. It makes us think about the reality of the situation. If everything is decreasing in price in terms of Bitcoin and it's increasing in price in terms of US dollars, what's the main difference here? Why is that happening? And once you start peeling the layers back, you kind of start seeing where this is going.
That's why it's even more important, I'd say, to just realize how predatory the system eventually is, because it's designed basically to not survive. Like any fiat money system, like no money system like that has ever survived. So you have to accept that you profited of something that is predatory to other people, and then you have to also accept that eventually it's assured towards a collapse. Does that make sense?
Predatory, if it's predatory towards other people, eventually it'll be predatory towards you.
Yes.
Right? You may not realize it.
Yes.
Even real estate investors, they think, oh, I'm protected because I own this real estate, I own all this land, I own all these properties. But what are you going to do when your government says to you that instead of just state taxes, we're also going to charge federal taxes on properties? That's going to be really fun to deal with. I think that's going to be absolutely insane for real estate investors if that happens. I'm not saying that's going to happen, but if it happens, what's going to happen is, let's say they increase your property taxes from 1% to 4%, 5%. What's your property value going to decrease to? There's no guarantee that that's not going to happen. There's also no guarantee that if governments really find an incentive in trying to make housing cheaper because now Bitcoin exists, how do you know that they're not going to start digging into the ground to build condos and apartments and just pump up the supply of real estate so much that prices actually start coming down? How do you know that if you're a real estate investor, how do you know that your government's not going to start funding 3D printed homes, prefabricated homes? How do you know that that's not going to happen? So the system is predatory towards the poor right now, the people who don't understand how fiat works. And I actually think, I would say the system is predatory towards the people who don't understand how assets work right now. I think it's going to transition to being predatory towards anybody who doesn't understand how fiat works in general. And most real estate investors don't actually understand how fiat works. They buy real estate because they want the cash flows, but the cash flows are decreasing in value over time. They want stocks because they want dividends. But again, those dividends are decreasing in value over time. Even what you own with stocks and real estate, with stocks actually, what you own isn't actually there. People say that they want to own the stock because they want the cash flow that the company is providing. How many cash flows have you gotten from Amazon? How many dividends have you gotten?
Yeah, none. Right? Yeah, exactly.
None.
Yeah.
It's all a trap, right? It's all just a way to keep your money stranded in one location so that you can't take it out and you can't do anything with it. If you start taking your 401k out, for example, inflation is going to go up. That's part of it, right? The goal is to have you delay spending as much as possible so that by the time you're old, you want fewer things, you want to spend, you have less energy to spend money, you have less things that you can actually put your money towards. The goal is to kick the can down the road. They're kicking the can down the road with your kids. They're also kicking the can down the road with you. You may think that, oh, it's only the younger generations that are going to be affected. No, you're affected too. You're going to be hit just as hard as the previous generations or the future generations.
Yeah.
So let's say, for example, when baby boomers want to retire and they have tons of stocks, they're going to dump their stocks on Gen X. Then when Gen X is going to retire, they're going to dump their stocks on millennials. Then when millennials are going to retire, they're going to dump their stocks on Gen Z. At some point, nobody's going to want stocks anymore, and the entire system collapses. I don't know how long that's going to take, but I think Bitcoin is going to be the reason for that. I think people are going to want Bitcoin over stocks. People are going to sell their stocks. They're going to sell their real estate to buy Bitcoin.
The word timing came up for me, right? Like, so yeah, like boomers had real estate and Gen X had the stock market, right? You could paint a similar picture here. If it's like what you said, it's a slow way to drain your wealth. Just take fees off you, and the S&P 500 is flat over X amount of time compared to the actual debasement of the money. Then, yeah, you just paid fees and you thought you were doing something, but yeah, in that sense, you are then the subject of the game.
Yeah, you're the golden goose.
Mm-hmm.
You're going to keep hatching eggs in the form of taxes and fees for Wall Street and the U.S. government. They're not going to want you to go away. They're going to want you they're going to want to keep you there. Basically, them getting you to buy stocks, to buy real estate, them getting you to buy, let's say, index funds, getting a 401k. That's them keeping their golden goose leashed in a small area. Because if you have those things, you can't just leave. You have to pay some kind of tax. You have to pay an exit tax. You have to watch out for those stocks doing whatever they need to while you're gone. Let's say, for example, if you want to leave the country, you're not just going to want to leave all your wealth in that country. You're going to have to tell somebody that, hey, I'm taking my wealth, I'm leaving. You have to be tied to that wealth basically forever. Mm-hmm. And if you try not to be, then you lose that wealth. You would be surprised. I mean, I was actually pretty shocked when I thought about how many times I would see people's accounts locked at the brokerage that I worked because they hadn't paid their taxes. If they didn't pay their taxes, let's say, for example, if somebody has a $1 million brokerage account and they didn't pay their taxes for like 2 years, 3 years, however long it is, I don't know what the details were, but let's say they didn't pay their taxes for a while, there were actually holds for IRS bills, right? So the IRS is the Internal Revenue Service, or sorry, the CRA, not the IRS, CRA, Canada Revenue Agency. So if you hadn't paid your bill, your accounts would be locked. And that just shows you don't own anything. You own nothing. The entire system is designed to get you to keep paying your taxes. If you behave badly, then your money gets taken away from you. If you go against protocol, then you lose everything.
All right, let's move on to the last topic we wanted to discuss, and that is allocation. How do you decide on like the percentage allocation? Is there a way for people to think about, what is the risk with Bitcoin, or how much should you understand Bitcoin? Or like what would be the main points for people to maybe study or understand before they can kind of like get to, what type of allocation would I be comfortable with?
So I don't really think that you're going to ever understand Bitcoin 100%. There's never going to be a time when you do that, but there's going to be a point where you feel comfortable. I think there's going to be a point where you finally realize, okay, this is the thing that's going to be the future, and that could take a lot of time, right? Even when I studied Bitcoin for like 3.5, 4 years, and I'm still learning new things. There's always new ways to think of things. There's always new technical things that I don't understand. I'm finally learning because of Bitcoin. And that's going to happen regardless. You can't ever know everything about Bitcoin. So if you think that you need to know everything about Bitcoin before you buy some, then you're never going to own Bitcoin. That's the first thing. The second thing that I want to say is that the more you study Bitcoin, the more you're going to understand how much you should have. Let's say, for example, if you only understand Bitcoin on a very shallow level, you're probably going to have 1 to 5%, maybe even 0% if you don't really understand it. If you just read headlines all day long, then you're not going to want Bitcoin at all. But if, let's say, for example, if you listen to a bunch of podcasts, if you listen to different opinions, if you listen to different thoughts, if you read different books, let's say you listen to Bram's podcast every morning, listen to my videos every morning, you read the Bitcoin Standard, you read all of the books that Saifedean published at his publishing house, you read the book behind me, The Internet of Money, all these different ways of getting information. At some point, let's say you start with a 1% allocation, at some point you're going to think, hey, why don't I have a 2% allocation? Then you're going to think, why don't I have a 3% allocation, 4%, 5%? Nobody can tell you what your allocation should be because you have to be able to deal with the volatility. If you can't deal with the volatility, then no allocation is good for you. You have to understand that you have to hold Bitcoin for at least 4 years. If you don't understand that and you buy Bitcoin, you're probably going to sell at a loss. I think that's the key here. If you understand that Bitcoin needs a 4-year minimum holding period, you're going to want to put more and more into it because you're going to see that the moving average price over time has just increased. And it doesn't really make any sense for you to hold Bitcoin for a year to put your rent money into it, for example. Let's say hold for a month, 2 months. It doesn't really make any sense because you're very likely going to lose money. Bitcoin is extremely volatile. Most of the times it goes sideways or it goes down. There are these random explosive moves up where Bitcoin's prices keeps going up and up and up, and suddenly it stops. It loses steam and then it starts falling. If you miss that period, let's say, for example, you only want to buy Bitcoin and you want to deal with the upside, you don't want to deal with the downside, you're going to lose money. You're pretty much guaranteed to lose money because you're not going to be able to time the market, especially if you're new to Bitcoin. The key here is as you study it more, you're going to want to allocate more. You're going to want to go from 1% to 5% to 10% to 20 to 50. Eventually, you'll want to go with 100%. I do think I think that a lot of people are going to do that. I think a lot of people are doing that right now. And the only reason why they even get to that point is because they've studied it. They understand where this is going. If you don't understand where Bitcoin is going, you're probably still thinking that you're going to think that 85K is overvalued. But when you understand Bitcoin, you realize that even $1 million is undervalued. So you're going to want to put as much of your wealth into it as possible.
I agree. I think that's a really good, sensible answer, right? Like the understanding and the conviction. The understanding comes from studying over time, and that's also, I think, what makes your conviction grow. Maybe that's the last nice thing also to share as like the mirror that it is, right? Like in my experience in the fiat money financial system and the stocks and all these things, it's about conviction based on what other people say a lot, right? Again, that abstraction. Whereas in Bitcoin, I think even our goal with this conversation is to trigger people so they study. Like, please don't build your conviction just on the fact that we are enthusiastic about this and that we talk about this. Like, you can actually do your Bitcoin study yourself. You can verify all the things that we said for yourself, basically. And I think that, again, is such an interesting characteristic of Bitcoin, that the conviction is not built on anyone else saying it. It's built on your own understanding of its comparison with current money, current store value assets, and eventually the use case of lowering your uncertainty towards the future, which is eventually, your wealth. And so I think that's a nice ender. Yeah, man, I want to thank you for this conversation. I think this went well. I hope people enjoyed also that watched us live. We put it live as well. And I think this also counts for you, right? If any people have any questions, you can just reach out to us. We're happy to help or point you in different directions of things to study, read, listen, watch. And yeah, man, thanks again.
Absolutely. Thank you so much for having me, man. I really appreciate it. These conversations are always so much fun.
I loved it too, man. Thank you.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.